Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool One, Jason Moser, from Motley Fool Income Investor, James Early, and from Fool.com, Matt Koppenheffer. Good to see you guys.
How's it
Good to
going?
see you,
Good to
Chris.
be here, Chris.
Earnings Palooza rolls on. We've got the latest results from Disney, Whole Foods, and Tesla Motors. Just in time for Mother's Day, one restaurant is making a very, very special offer. And as always, we've got a few stocks on our radar. But we begin this week with the market in general. The Dow Index hitting a record high this week, crossing the 15,000 mark. James, we were joking earlier in the week on Investor Beat when we had our 15,105 special. But come on, this is America. We love big numbers that end in lots of zeros. But all kidding aside, when you think about the market hitting a new high, what does that do for your investment thinking?
Well, Chris, what's interesting about this new high is it's set not so much because of high expectations, but because there's not many other places to put the cash. I mean, bonds aren't any good. People are just fearful. It's kind of like the high school girl who asks out every guy she knows to go to the prom until someone finally says yes. It's not so much a union made of passion of just because it's more default.
Just settling.
I would say, practically speaking, though, you don't have to buy the whole market. That's the beauty of investing. A lot of the larger cap blue chip names are a little bit rich, but there are plenty of smaller and more international companies that I see a lot of value in.
Jason, what about you? How are you looking at this?
I mean, I think that James is spot on. That I think that the market
With
is
the high
really,
school girl analogy?
Well, I mean, to his point there, I think now we really need to look for quality. So you really want to go after like the prom queen, or if you're a girl, the prom king, right? I mean, you really need to find the quality in these companies because this rising tide is lifting all boats. Fixed income is dead for the foreseeable future, and really the market is the place to go for returns. And so that's where the money's going. It's bidding up all of these prices. Now, it's not to say that some of these companies don't deserve these prices that they're fetching, but it does make me it raises the burden for me even more when I see these lofty valuations. I really, really want to make sure the companies that we're buying into have sustainable ways to make their money. You see a lot of these .com companies that have yet to really proven sustainable models, that they're fetching some pretty high valuations. And that's where I would tell people to be very careful.
Matt, you agree with that?
It's one of the weird things about the stock market, right? That people get excited when prices go up and they get depressed when prices go down. I'm on Banana Republic's email list, and they send me way too many emails. When I get an email that just says buy our stuff, I usually don't click through. When they send me an email that says we'll give you 30% off, I usually click through and I'm looking at some stuff. In the stock market, it's the same thing. We're looking for sales, we're looking for lower prices. When prices go up, eventual returns go down. But like these guys are saying, if you look for individual companies, if you look for good deals out there, I think there are still some that are worth buying into.
Are you a Banana Republic guy in general, like fashion-wise? You seem pretty fashionable. I'm thinking about role modeling you, so I'm asking you.
The Banana Republic clothes fit me.
Yeah.
It's good enough. It's easy. I like shopping at places I don't have to think about, and Banana's one of
Maybe
them.
I'll get on the email list, too.
We need all the help we can get. All right, let's get to some of those individual companies. Facebook is reportedly in the final stage of negotiations to acquire Waze, a GPS software startup company based in Israel. Matt, the price tag is reportedly somewhere in the neighborhood of $800 million to $1 billion. That's more than they paid for Instagram. What do you think about this?
Well, the first thing that comes to my mind is so Facebook now they know who my friends are. They know who my family is. They know what I like. They have lots of pictures of me, and now they will know where I am at all times and where I'm going. This is the next level of creepy here.
Working at Facebook must be a stalker's dream. I mean, think about that. I mean, if I were still... okay.
From a business perspective, I think there is, I think there is some good news in this potential move. It's kind of a sniper's thing. They're narrowing down all of the different places that their customers are, that their subscribers, the people on Facebook, where they are, what they're doing. This makes the advertising that much more attractive.
What do you think, Jason?
I was really blown away by just the screenshot I saw of Waze and the little characters that are in there. It's like you got guys with like crowns and swords, and it kind of took me back to King Arthur's court there for a minute. But I have a feeling that when Facebook buys Waze, they're actually going to probably change it immediately to Trafficville or something like that, because that's what it strikes me as. I mean, the one thing with Facebook, it fetches this high multiple, and it's yet to really prove out its business model. We're not sure how they're going to be making their money. Well, I think this is just really another example of how they plan to make their money. They're just going to buy it. So I'm still very skeptical of Facebook as far as its monetization goes, and I think that today's price still doesn't put me in a range where I'd feel comfortable buying the stock.
You guys were trying to explain to me Waze earlier this morning, and I was just trying to get it, but I'm not sure I do. It's just like a GPS system where people input things, right? And then they get Lucky Charm type feedback if you input a lot. Is that
right.
correct?
So it's not just like a Google Maps where you're figuring out the best route to drive along. It goes one step further to include interactions and engagement with the people who are driving. I'm not sure how the people who are against texting while driving will feel about this, but among the features is a police officer spotter, so that if you're driving along, you can press a button and indicate, oh, there's a speed trap right there, and then if I'm driving a little ways behind you, I'm also going to get the benefit of that input.
I think it's also sort of that garbage in, garbage out mentality. And they're rating people who are putting in good information and recognizing you as someone. If you put in good information, then maybe you get the crown or the sword, and people will look at you with awe that you're
and this
a great
improves my
reporter.
self-worth as a human being on this planet, right? If I get these charms.
More or less. I mean, you would feel good about yourself.
Okay.
But
But trying to
then-
get the value add.
Hopefully they integrate it to the point where then you can take your Lucky Charms and then go to Farmville and buy a pig or something like that.
I
Which
think
is what we all want to do at the end of the day.
Absolutely. Just to wrap up on the stock, next week is the 1-year anniversary of Facebook's IPO. And on that opening day, it hit a market cap of just north of $100 billion. Right now, it's around $65 billion. Put a time frame on it. When do you think this when do you think this company is going to get back to that level of valuation? Is it within the next 12 months? Is it farther down the line than there?
Truthfully, I think it's much farther down the line. I mean, anything can happen. Obviously, the market behaves the way it wants to behave. But when I look at something like a Facebook, from a longer time perspective, they just still have not really proven to me beyond a reasonable doubt that they'll be able to sustain a real money-making model. And so even at today's prices, I'd still stay away.
Yeah, I'm with Matt. They seem like a bunch of obnoxious peeping toms to me. I mean, I'm going to say 50%
don't
chance
think-
it never goes above $100 billion.
I don't think Matt was actually indicating that, but we'll move on. Microsoft has reportedly offered $1 billion to Barnes & Noble to buy Nook Media. Microsoft would get the Nook tablets, e-readers, e-books, and the college book division. Jason, shares of Barnes & Noble shot up 24% on Thursday when this news broke. Is this a good move for either company, for just one of them, for both? What do you think?
Well, I think that remains to be seen. I think it's probably the most logical deal given Microsoft's ties with Barnes & Noble today. But, I mean, the fact still remains that you're going up against these other big players in the space like Amazon. Amazon, obviously, the number one player there, and even Apple to a degree. So they've done a great job of getting those devices in our hands to buy books. And so it kind of gives you sort of a feeling that the physical bookstore is going away to some degree. I don't know that this really is a good deal for either squad, but I would have to imagine that Barnes & Noble's investors are more, I guess, optimistic about it than not, because it does give them a chance at least for potentially Barnes & Noble to go back to their physical bookstore,
Isn't
which
it
is
like
really
a
their bread and
a
butter.
person donating all his blood? I mean, what do they have after this is gone, right?
I was going to say, we talked earlier in the week about this. It seems like at the end of the day, while Thursday was obviously a great day for Barnes & Noble shareholders, if this deal gets done, then they're going to have a big pile of cash and a bricks and mortar business.
And I think that those who own Nook devices will probably have some nice paperweights. But, I mean, I think this lends back to what we were talking about earlier in the week with Microsoft. For a long time, Microsoft was a very innovative company, and they've turned into sort of this reactive company. They're not very innovative right now. They're kind of doing that same thing and trying to buy growth and buy new ways to sort of diversify the business. And this probably isn't really going to do much to gain share in that ebook segment when you're going up against something like an Amazon already. I don't know that it really works that well for either one.
Shares of Bank of America hit a 2-year high this week when news broke that Bank of America and MBIA reached a $1.7 billion settlement. James, this stems from the days when MBIA was dealing with Merrill Lynch and Countrywide. Is Barnes & Noble, is Bank of America anywhere close to the finish line in dealing with just the residual effects of the Countrywide acquisition?
Probably close. I mean, the sub 40-minute version, Chris, is that acquisitions don't always work out very well. These guys bought Countrywide indirectly a few years ago, wrote a bunch of garbage loans. MBIA insured these loans, and then that sort of went bad, and so they're trying to recoup. So these guys have settled, but we still have the U.S. government is suing Bank of America for Fannie and Freddie problems. Bank of America is trying to settle with Countrywide investors. Some European banks, AIG, they have lawsuits. So we're not done yet.
Is the stock at all attractive? Obviously, it's at a 2-year high, but is it time to jump in?
Yeah, that's not saying much. I'm still not a buyer at these prices.
Sticking with banks, Matt, there have been more calls this week for JPMorgan to separate the positions of CEO and chairman, both of those positions held by Jamie Dimon right now. He's feeling more heat. What do you think? Is this a smart move, or is this just people are looking to punish Jamie Dimon for the whole London whale incident last year?
I think it's a little bit of noise. I have this personality where when everybody is of one opinion, I want to automatically be of the other opinion. So coming out of the financial crisis, everybody loved Jamie Dimon. He was like the greatest banker out there. And I kind of said, well, there's probably more to the story than that. Since then, we've seen the more to the story. We've had the London whale situation. We've got this new lawsuit from California. So Jamie Dimon is not the amazing banker that people thought he was. But now that everybody's kind of on the anti-Dimon bandwagon, I'm thinking, he's a good banker, and I don't think there's any reason to split up these positions.
But as part of him being a good banker, the company he keeps, because certainly, to go back to Bank of America, you look at a Brian Moynihan who, charitably, his track record over the last few years is not that great.
Diamonds over the last few years?
Well, I would say Moynihan.
Moynihan.
So if you're Dimon, you're hanging out with the likes of Brian Moynihan.
Sure, yeah.
And once upon a time, Vikram Pandit at Citigroup. And it's,
there's not much of a comparison. And the only really big bank out there that puts Dimon to shame is you've got Wells Fargo and John Stumpf, and they put Dimon and JPMorgan to shame to a considerable extent. So it's not a very high hurdle for him, but he did clear the hurdle.
Great hair, too.
Great hair.
Great hair on Jamie
Attractive
Dimon.
man.
Coming up, some hedge fund managers have been betting heavily against Tesla Motors, and those hedge fund managers had a really, really bad week. Stay right here. This is Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in studio with Jason Moser, James Early, and Matt Koppenheffer. Disney's second quarter profit was up 32%. I'm going to use the word up a lot, Jason. Parks and resorts were up, studios were up, media networks up. Shares hitting a new all-time high this week.
They had a movie called Up, too.
They did once upon a time.
Good,
Is there any badness to their quarter?
Well, sure. I mean, we can always find badness. I mean, I think that when we talk about really looking for quality companies today with this rising tide, I think Disney stands out as an example of one of those companies that you really want to seek out. I mean, definitely tremendous global scale. I mean, you look at the different ways they make their money, and I think that's one of the most attractive parts about the company. But for the quarter itself, the thing that really stood out to me was the parks segment. It's one of their bigger money makers, but for the longest time, the parks have really had a lot of trouble because they've had to discount tickets to figure out ways to get people in the door. And because they have so many fixed operating expenses in those parks that have to run no matter what, their operating income in those parks had been low for a number of years now. But we saw sort of the flip side of that coin, that when they're able to bring more people into the door, traffic was up 14%, revenue was up 14%, attendance was up 8%, and spending inside the park was up 10%.
I went to a park this past quarter.
Yes,
actually.
you did.
My
and
first
you came
time
back
ever.
with 7 days this guy pulled, like a marathon.
Wow.
Yeah, there's a lot.
That's impressive.
That's a bit too long, but I'm sure you probably contributed to these results, James. But I think that's one of the most encouraging parts about Disney, and I think it speaks a little bit to the general economic recovery as well. I mean, people are going back out and spending a little bit more money.
We were talking during the break about Bob Iger, the CEO, and what an amazing job he's done over the last few years, particularly with acquisitions of Pixar and Marvel. He's going to be in the CEO office for another couple of years, but how soon does he need to start paving the way for his successor? Because somewhere, probably not this year, but certainly in 2014, shareholders are going to want to know who's going to be next.
Yeah, and I'd like to believe they're probably looking at that as we speak. I would think that in 2014 we'll probably get some more clarity as to the strategy there. But you're right. I think that's one of the biggest risks with Disney right now, is because Iger has done such a great job with those 3 acquisitions, or at least he's done a great job with the 2. Lucasfilms is yet to prove out, but I think we all are relatively optimistic that it will. I mean, everybody loves Darth Vader. That said, I mean, I do think that's probably the biggest risk with the company right now, and we'll probably get some more insight to it in 2014.
Whole Foods second quarter profit rose 20%. Same-store sales were up 7%. Stock hit an all-time high, Matt, and they announced a 2-for-1 stock split. It really seems like things are going well over at Whole Foods.
Well, Jason was just talking about people spending more money, and I guess that's definitely the case here. And now I can't actually do all of my shopping at Whole Foods because they don't have Captain Crunch or Cookie Crisp, but people are definitely shopping there. One of the things that jumped out at me, interestingly, stores, Whole Foods stores over 15 years old had comp store growth of 5%.
Wow.
Which I thought was very impressive. The margin margins there are just so strong. I mean, the grocery business is such a thin margin business. You just got to do a ton of volume. Whole Foods just blows away all these other stores.
Mango flash sale.
Mango flash sale, yeah. Do they? When you look at the stock, though, is it a little pricey? It seems like this might not be the time to jump in.
I don't know. I'm a bad one to ask. I get too focused on numbers like that, on valuations like that, and I'm always saying, oh, it's just a little bit too expensive. But you end up missing so many good stories, good companies by doing that.
Just to underscore the power of the brand, Chris, my cholesterol is a little bit high, so I've been eating oatmeal from Whole Foods in the morning for breakfast. And shortly before coming into tape here, I was chewing the oatmeal and I felt something a little bit hard. I almost just swallowed it, but I figured I'll see what it is. So it's actually somebody's fingernail. So I threw that away.
Wow.
But I'm going to go back and get oatmeal again on Monday because I love Whole Foods that much.
Now, are we clear this is a fingernail that didn't come from your house?
It was colored, colored from being heated with the oatmeal. Yeah, it was, yeah.
Moving on, for the first time in its 10-year history, Tesla Motors has reported a quarterly profit. They made $11 million in profit in the first quarter. Revenue up 83% from the previous quarter. Stock up big, James, and those people betting against Tesla had a really bad week.
It was a bad week for them, Chris. But to be fair, this is an overnight success that was 10 years in the making. This is their first profit in 10 years. So the shorts actually had an understandable case. They didn't win this one. The stock is about a double over the past couple of months. It's gone from $4 to $8, and I think there used to be 40% short interest, which is really, really high. It's not in my camp. It's not the kind of stock I would buy, just my style of investing, but I wouldn't bet against it.
What do you think, Jason, when you look at the stock at an all-time high? Again, it seems like for people who want to go the other direction and say, oh, it's nothing but profitable quarters from here on in.
Yeah, there are all-time highs that you want to buy into, and then there are other ones that you want to run away from. And I think this is one that you probably want to run away from. It's not to say that Tesla won't be able to succeed. I think we're all probably rooting for them to a degree, but as James mentioned, I mean, it was one profitable quarter. They are going to have to probably raise some more capital here very soon. So I imagine we'll see a better stock price in the coming months.
In the minute we have left, it's Mother's Day weekend. And guys, you could go with the usual cards and flowers and that sort of thing. But one all-American restaurant chain wants to welcome mom with open arms. And I'm referring, of course, to Hooters. This Mother's Day, Hooters is offering free entrees for mothers who bring their children and buy any drink. Dave Henninger, the chief marketing officer, said, "We know you don't think of Hooters as a typical place to take mom, but we want to make it more appealing for mom to come in." What do you think?
I think they can make it really appealing if they offered free photographs with Ricky Bobby to come with your brunch at Hooters.
James, I'm
bringing the kid is this the hard part? It just seems icky, but.
Matt?
Wings and orange hot pants. I mean, what is Mother's Day really all about if it's not that?
Wow, when you put it that way, I mean, what's more all-American than that? All right, Matt Koppenheffer, James Early, Jason Moser. Guys, we'll see you a little later in the show. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. I'm Chris Hill. Joining me in studio once again, Jason Moser, James Early, and Matt Koppenheffer. Time for the stocks that are on our radar this week. We'll bring in our man Steve Broda from the other side of the glass. I know he probably wanted to get in on the Hooters conversation, but we just
No, I didn't.
We did. He'll hit you with a question. Matt Koppenheffer, what is your stock this week?
So I spent the last weekend with Joe Mager of our Inside Value service at the Berkshire Hathaway annual meeting. We did most of our talking about Berkshire, but Joe is a big fan of Amazon.com. This is just it's a fantastic business, and it's about where roughly 50% of my paycheck goes. I am not an owner of Amazon.com. I am a numbers value kind of guy, I'm revisiting this stock, revisiting this company. I think this is one that I might like to own.
And the ticker symbol?
AMZN.
Steve, question about Amazon?
I am an Amazon Prime customer, so I subscribe to their Prime service. And do you feel like it's slipping lately? I feel like they were really fired up to send me my stuff real fast, and I feel like they're just kind of letting it go lately.
This will throw myself under the bus. I order so much from Amazon that I forget what I order, and as everything arrives, it's just a great surprise every time.
As a longtime shareholder, I can say you are a dream customer, so thank you for that.
Is it possible, Steve, you're just raising your expectations?
It could be that too. I don't know.
James, what about you?
I'm going with Brightburn Energy Partners. This is an oil and gas business. It's a master limited partnership. It's about as exciting as it sounds. They own and lease oil and gas companies. Their fortunes are going to rise and fall with oil and gas prices, but they do hedge a lot. The key point here is they pay a 10% dividend yield. It's very hard to get a 10% dividend yield in this market. So if you like a 10% dividend yield, BBEP.
Can I trust that dividend yield? For how long?
Pretty good. Anything that high is not guaranteed, right? But it's more solid than others.
So it's like a 6 out of 10.
It's got the James Early pretty good stamp of approval. So I think we all know what that's worth. Jason, we got about a minute left.
Okay, so I don't think this doesn't really apply to Mother's Day brunch at Hooters, but I think in many restaurants nowadays you need to get a reservation, and I'm finding that I'm making more reservations, which has opened my eyes to OpenTable. So I'm looking into this business a little bit more. I like the fact that they're getting themselves installed in these restaurants with their electronic reservation booking system, and they make money from selling the software to the restaurant, to providing the service, to getting a scrape off of every reservation that's placed, and they continue to grow their base of restaurants that they're in. So between North America and the rest of the world, this is a company that's going to, I think, continue to grow over time.
And the ticker?
Ticker is OPEN.
Steve?
Last time you used OpenTable?
Actually, about an hour ago to make a reservation for Mother's Day brunch.
He's talking his book. All right, that does it for this week. James Early, Matt Koppenheffer, Jason Moser. Guys, thanks for being here.
Thank you, Chris.
Thanks, Chris.
Our engineer is Steve Roydo. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you next week.